welcome to the Barbarian Investor Show. I'm Adam Jason, and I'm delighted to be joined today by William Mougayar, the author of The Business Blockchain, founder of Token Summit Conference, and also managing partner of JM3 Capital. It's great to have you, William.
Thank you, Adam.
So let's get straight into it. Crypto tokens, or however you want to phrase it, it's been a real disruption to kind of traditional crowdfunding or even general fundraising models. How much of an impact do you think it's had so far in general on the kind of startup landscape and the business landscape in a wider kind of scope?
Sure. So the disruption is a disruption that is going to happen. We have not seen disruption happen in reality right now. Because especially with big companies, you see, big companies do not want to disrupt themselves. They pay a lot of lip service to disruption, but for them, they are going to take it in the slower doses. And then on the other hand, I see a lot of startups that are doing what I call tokens 1.0. They are trying to apply the existing models to the blockchain. So we're doing something on the web today this way, let's do it on the blockchain this other way. But that is not a lot of disruption, that is not a lot of innovation. What we need to see more of is companies that are creating new methods of doing things on the blockchain that could not be done elsewhere. If you think of the CryptoKitties example, for example, you could not do CryptoKitties on the web. I could not take one out of my pocket and give it to you. It has to exist on the blockchain. And I'd love to see more examples that are purely blockchain based that have no equivalent anywhere else.
Right, so because it seems as though a token is a useful mechanism for fundraising, and as you say, it might not necessarily be the underpinning reason behind the business. So, I mean, we now have all these tokens, and Bitcoin was supposed to make transacting more simple. So how do you reconcile, having all these different tokens and crypto assets for all these different services? What do you think the landscape will look like to use it in a simple way with interfaces that, don't require going in and out of 100 different tokens?
Sure. The currency, the tokens landscape today is very diversified, and we see a lot of ways to classify tokens. But in my opinion, classifying tokens is a bit of a slippery slope. Really, the token is more of a utility right now. So you have to think about the usage case of the token specifically. And right now, we're thinking about it, but we shouldn't in the future. In the future, the token will be part of the application. In the same way that today you pull up your smartphone and you use different applications on a daily basis. In the future, many of these applications will have a wallet. And the wallet will include tokens and currency that might be a reward for something you may have done. And that is really the future. It will be embedded. You will not know that you are using the blockchain, and the token will be just as part of the application.
Right, and you mentioned there, utility token, and there's a big debate about utility tokens versus security tokens, which is largely a regulatory issue, right? So how do you perceive the regulatory input or effect on the growth of the blockchain kind of ecosystem globally?
Sure, the compliance and regulatory framework today is like a big cloud that is hanging on top of what is going on in the market. Especially in the Western world, the regulators have been mostly conservative, and they see everything as a security, unfortunately. What this has done, it has done two things. It has forced the companies to do private placement offerings, so going under the radar and complying with the existing regulations. And the second thing it has done, it has pushed some of them to go to other jurisdictions that are more friendly and more clear about how they see and how they treat ICOs and token offerings. In Gibraltar, in Malta, and even Switzerland has been more forthcoming, for example, in clarifying what constitutes a legal ICO and what does not. So that is really what this has done to the situation at this point.
Right, and do you think that it's possible to have within the crypto space itself a kind of inbuilt self-regulation within the protocol, so that it can be truly kind of transcending nation states and governments and regulators?
That's a very good question. In theory, that is possible. Now, there's two types of self-regulation. There's self-regulation at the macroeconomic level, at the level of how you regulate this whole industry. And actually, Japan has been leading in this specific area. There is self-regulation in Japan. There is a group that is formed recently that includes government entities and industry. In Japan, the government trusts the industry maybe a bit more than in other countries.
Right.
So they have been able to work together. In theory, protocols can be very precise if they work properly. But we have to be able to walk before we can run. If we try to automate the processes and the algorithms just because the blockchain can, without having experience in how it works actually before we automate, then we're going to have accidents. This is the same thing that happened with the DAO a few years ago. We tried to do too much and we overshot. So we have to really understand the modeling, because on paper, in a white paper or on a spreadsheet, everything looks perfect. But no plan survives the battleground. When you go and start to hit the market, then you get the reality. And that's when you adjust your algorithms, and that's when you adjust your models. And then as we do that, I would love to see more and more gradually enabling the blockchain to enact these consequences, because that's the nature of smart contracts. Smart contracts is business logic. If this, then that, with money involved. So if a certain number of conditions are met, then let's have this transfer of value. But you amplify it and you multiply it and you make it more complex, and a lot of good things can happen if you do it the right way.
So there has to be a bit of a balance between centralization and decentralization, really. And just a final thought, JM3 Capital, what are you really excited about at the moment? What are you guys focusing on?
So JM3 Capital is a new division of Jaipur Capital Partners based out of Geneva. And I've recently joined them to start this new division that will be looking at further opportunities in the space. So I'm very excited that we're bridging the European angle with the North American angle, which is where I come from, and having this global kind of synergy is very exciting, because we're seeing deals right now from both sides of the ocean. And there's a lot of activity in Europe, in Berlin, in London, in Switzerland, as well as in New York, San Francisco, and anywhere in the world, because this phenomenon is very global.
Fantastic. William Mougayar, thank you very much for joining us.
Thanks for having me.
Cheers.